The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, we're back, folks, and the first chart that I posted into Tiger TV today was the chart that Basil was finishing up with. That was the biotech index, and as you can see, we've been making higher highs for quite a while. It's down a little bit from yesterday's close, but it's still very, very early in the day. It could turn around and, spike up a lot higher, but it is making one of those extension patterns that is usually associated with a pretty severe correction. Whether that'll occur this time or not, we'll have to wait and see. The next chart that I wanted to post into Tiger TV today is the Bradley stock market model, because we are making a 78% retracement on the Dow Jones from the high we made on New Year's Eve. Actually, the full moon came in on January 1st. The new moon came in on January 1st. And we have a full moon that is completing today. So this will be a very interesting sequence of events. I have to agree with Basil 120%, is that if we get above this 165, 50, 166 level, making new highs in the Dow, then the Bradley model is most probably going to be wrong, and we're probably going to be looking at least 1,000 points higher in the Dow, because that's where the ABCD, would go to. Maybe it really is different this time. Beginning to make me think that it might be. Maybe Isaac Newton's law is going to be rejected, so we'll have to let history tell us if that's going to be the case or not. But I did want to put into Tiger TV the sequence of events that have occurred here on the in the S&P over the last 13 days, and I wanted to just show how when we made the new moon back on New Year's Day, we came down into yesterday. Now the question is, we have the full moon today. Well, did the full moon come in early by 1 day? Because it certainly could do that. It's got an orb of 3 days, 1 day on the left, the exact day, and 1 day on the right. We could very easily, be going and making, that was a major correction. That was a very minor one, but it was an ABCD correction that occurred over 2 weeks. The market didn't even drop 3%. And yet, if it closes really strong today, that's exactly what could have happened, and we could be up for a whole new leg, in the market. We made a perfect ABCD to the downside yesterday in the New York Stock Exchange Index. We did it in the Dow Jones. The Dow actually went a little bit below it, and then of course it came screaming back. But these are times where the market is just very, very strong, and you can't stand in front of it when it blows through there. Today's an important day, because if this is in fact the full moon day, then that means that we will top sometime today or early tomorrow at the very latest, and then start down again. But if the low was yesterday, which I'm beginning to believe that's where it was, we could go substantially higher. We've made new highs in the NASDAQ. We've made new highs in the Russell. We made new highs in the biotech. We haven't made a 78% retracement in the Dow yet, but that's just not very far away. And we have made a 78% retracement in the New York Stock Exchange Index from the high of January 1st. So all of those are getting ready to break out, and when they break out to the upside, there's just the only thing you can look for is a 1.27 or 1.618 expansion of those numbers, and you certainly can't stand in front of it. So just keep in mind that that's what we're looking at. The close today will be very, very important, because if we do close on the lower part of the range today, that would tell us that maybe today was the full moon, and we should be looking at something to the downside. But this market does not want to give up very easily. I know we have record margin debt. I know we have the largest number of bulls, but We had that in 2000, and the market kept going up for almost 6 weeks in the NASDAQ. The Dow didn't, but the NASDAQ just continued to go. But that was part of the dot-com bubble that we will not see again. Some of you young people will, but they won't see it again in my generation. I can believe that with 100% reliability. Now, the next order of business here is we have to take a look at the VIX index, because we are down today. We're not totally collapsing, given the fact that the Dow is down. The Dow is up over 120 points, and the VIX is doing very, very little. So there's no fear, there's no greed. Well, there's a lot of greed, but there's no fear in the market at all. And history tells us that this will occur, but the question is when. And that big ABC that we made yesterday in the S&P looks like a pretty significant bottom, folks. If we take out that low around 1812, 1810 in the cash S&P, in the S&P 500, we're trading at 1844 right now. So that would tell us that the market would move to the downside. But until that happens, this market has a very positive bias. It took 14 days to make a 3% correction, and it couldn't even make a 382 off the previous low. That's a very, very bullish scenario, and so you can't stand in front of that type of bullishness. If we'd have gone below 1798, that there might have been a chance for the bears if it hadn't exploded in one day. That one-day explosion tells you that there was some type of a cycle bottom at that time, and you must respect it without any reservation at all, because these markets can go a lot higher than we anticipate, as we well know. The long-term chart on the VIX index also is telling us that we've been down here for well over 18 months in this same area, which tells us that we should be looking at something of a pretty massive correction, and then we'll see if that's the case. I have people ask me questions about if this has anything to do with the presidency. I don't think that it does. That's just one man's opinion. I'm sure a lot of it has to do with what the Federal Reserve has been doing with the stock market and stuff. But frankly, folks, it's just a natural cycle. I've said all along, before this is all over, there's going to be some of these bankers in Wall Street that are going to be getting a paid vacation on a high carb diet, someplace in the Midwest or the South. But when that happens, we'll have to wait and see. It'll take someone with a great deal of power, one of our senators, or possibly. It'd have to be a senator, or maybe, the president wouldn't do it for sure, but somebody's got to step in. Might even be one of the Supreme Court justices. You don't know. Someone's going to come in and say, look, they're breaking all these laws, nobody's going to jail. We've got to change this. I mean, that's the bottom line of what we're looking at when we're watching some of these things here. So we are getting a little bit of a bounce in the bonds. It means interest rates are backing off a very small amount, which is what we expected, because they were incredibly oversold, and it looks like that we have a chance for a little bit more of a rally to at least correct the bearishness that we have in the bonds. But any way you look at it, folks, the bond market looks incredibly bearish, and I don't see any hope for it in the long term. We might get 3 or 4 months of a rally here with lower rates, but frankly, it doesn't. Somebody just Skyped me and says it's no longer too big to fail; it's too big to jail, and I think that's probably a good moniker to hang on the folks. But that's a good one. It's really funny to see. Well, it's not funny if you're a J.P. Morgan stockholder, but have them to pay almost $20 billion in fines, and yet your income was only reduced by 7.9%. Boy, you got to be thinking they're making a whole lot of money. So I guess they are too big to fail. They certainly don't back us up when we have a problem, but that's the way that's the way it goes. Wall Street works that way. Nothing we can say about it. We have a question from someone in Connecticut about the action that we're having in gold, and since we are on the show here, let's just take a quick look here, and I'll pull up the gold chart. And we've had a nice little correction here over the past few days, just a small one, but it's good enough to tell us a little bit about the market, because we came down to a nice retracement. We came down to the 618 retracement of the previous low that we made just a few days ago. And I will put that in there to let you folks see it. And we did hold that low so far this morning. We went right down to that 1234 level, and that should be pretty good support. But we really needed to get moving above 1250 in order to get it to be something that we could look at, from the long side. We're very bullish this, but we still have to be able to see what the next correction is going to be to the upside before we go any farther here. We've got a call from David in Palm Beach, Florida, the place where W.D. Gann passed away. What can I help you with, David?
Are you? Larry, appreciate everything you do. Just got a quick question. Going back in November, I remember you saying that if we didn't get this correction in December, you were hanging it up. What's going on? Really, we do listen. O'Brien's been talking, he missed it by 1,000 points in 5 years. And here you guys talking about the Federal Reserve is a little bit ridiculous.
Well, it's true. I don't know what the Fed's doing, but no one else does either. But I do have, as far as hanging it up, I have the nail on the desk. I have the hammer set on the floor, and all I'm waiting for is if the New York Stock Exchange...
I just think if we can have an honest discussion. There are people out here that, foolish enough to listen to you guys day in and day out.
Yep.
And, this is with their hard-earned money, and I just think it's ludicrous what you guys do. I really do.
Okay, well, I mentioned now I'm not short this whole time. I was bullish in October. There's no question about I was bullish in October because we had a turn in the Bradley and we were at a 61% retracement. I hope we didn't lose that, gentlemen, because I really like to be challenged. Hope he calls back because I think I should be responsible for that. That's it. But I will. I'm going to answer his question. I've been wrong, especially since November the 25th. I really believe that November 25th, that high we made in the New York Stock Exchange Index, was going to be good, but it isn't. We're going to take a little break. We're going to come back. I'm going to go through them.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're answering a question about the gold market. We did go right up to that resistance level in the 1255, 1260 area, which was the 786 off the previous high. We backed off a little bit here. Today's low was a 61% retracement down at that 1233 level. We rallied about $7 or $8, which isn't very much from that level, but that's what's happened, and the market has continued to rally a little bit, but not very much. Before that, we were talking about the VIX index and the fact that it was very, very low, and then we did have a gentleman on, saying that we'd been wrong for a very, very long time. But I have to say, folks, I was bullish from October till November the 25th. That was the next Bradley date that we had. And then at that time, I did get bearish. The market backed off a little bit, as a matter of fact, and then went back and made new highs. When the market makes new highs, folks, I mean, it's silly to just stay there and let it make new highs day after day. Wait till it gets to another ratio or something like that. You have to use some type of stop protection. My goodness, we've been bearish bonds here for 18 months. We've been bullish the dollar versus the yen for 18 months. We've been bearish gold for well over 7 months, and did pretty well. And most of my trades are shorter term anyway, so the longer term trend doesn't even have an effect in it. and also, crude oil. We were smart enough to say that around $100 a barrel crude was going to have some trouble, and it certainly did. So I try to get some of them right. I don't get all of them right, but he asked me when I was going to hang it up, and my hang-up point is if that New York Stock Exchange Index makes a new high over what it made the other day, then I'm have to say the long-term pattern is not going to change, folks. We're going down. It's just a matter of we're not going to go down now. So that's it. Today's an important day because of the full moon, but that could have happened last night, and that's what caused the the move to the upside. So we'll just have to wait and see what happens to the next one. Now, silver has really not done very much today. It's been under some severe pressure, and it has not really responded very much like what gold did on the upside either. It just barely got to the point where it would get unchanged on the day for just a little bit, and then it sold off for another 11 cents. But it's still in a relatively tight trading range, given what's happening to some of these markets. We are starting to see signs of really good volatility, because what you're seeing on the upside, you're going to see by a factor of 1.618 on the downside. This much Mr. Newton from the 17th century was absolutely correct on. So what does go up will come down. It's just a question of when, and when they come down harder than when they go up. So just keep your powder dry. Things will be okay. And look at it this way, folks. Even if I'm 1,000% wrong, as opposed to being 100% wrong, we're going to be living in Camelot. All the debts are going to be relieved, and we're all going to get our entitlement checks, and no one will have to work anymore. And that'll make everybody very happy. You don't have to do anything. We'll just stand around and wait and see what happens as we spend our money. Of course, it probably won't be able to buy very much, but we'll see. Okay, I wanted to mention one other thing about Roger Babson, who was the fellow from 1929. I guess I'm his reborn twin, but I doubt it. He was talking about a big top in the stock market from July through September of 1929, and he wrote a lot of papers about it and stuff. And when it finally did occur, no one believed him. And so what difference does it make, when you get down to the real nitty-gritty of what really happens here. But when you got the markets making new highs like this, it's difficult to try to pick a top because you want to wait. I thought that the Bradley model was going to do it, but right now that has not occurred. We have the Dow Jones is up 126 now at 16,500. It's only 100 points away from 16,600, which it could make today. We got the NASDAQ up 25 and gold down $6.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've had a request to take a look at the euro because we were talking about the short side of the euro about a week and a half ago when it was up around the 138 level, which was the 161, which was the 61% retracement coming off the high from 2011. We hit that twice. We hit it once in October. We hit it again in early December, and then we broke down very hard, and then we had a very minor rally. And what I'm going to do now is I'm going to pull up the 60-minute chart and show you how shallow this rally really was. It just barely made a 382 retracement, which is the minimum Fibonacci level that we look at when we're trying to determine where support and resistance is going to come in. And so I'll just give me a second here, and I'll put this into the Tiger TV. You'll see the shorter version of it. We stopped today exactly at the 786 down at 139.80. And as long as that doesn't break out, it looks like there's going to be some type of support here. However, the odds favor that it's going to continue down to the downside and break that level of 135.40, and that would give a price objective of quite a ways down, about another $3,000 down around the 133.60 level. if it in fact does that. So it's going to be really interesting what happens here. Okay, we got the Dow up about 120, and we've got a caller from, it's our contrary opinion expert, Alex. Are you there, my friend?
Yes, I am, Larry.
Are you still sending me checks?
Well, yeah, it's nice to have someone fighting and losing when I'm on the wrong side.
No, whoa, boy. Well, let's back up, dude. Those two words are not applying. You think I'm going to stand in front of something like this? You have go ahead. Fire away.
I realize that you're smart enough to do it. What I'm talking about is your 500-point one-day decline in the Dow.
Yeah. Yes.
That's only 3%. It's a pullback. It wouldn't even really be significant. Google, Priceline, Tesla, they've all had 3% pullbacks and gone on to new highs.
All I'm saying is when you see it, just pay attention.
It could be a buying opportunity.
I'm sure it might be. But just be careful. That's all I'm saying is that when you see these markets go up, they come down. I mean, they usually have in the past. This time it hasn't. But I'm just saying from personal experience what happened. And then what'll happen is after you have the first one, the next one will be 1.618 of that, and that'll be 800 points. And the next one will be 1.6 that, and that'll be 1,300 points.
But you talk about 1987. If you look on a long-term chart of the Dow, 1987 is only a blip.
Alex, my friend, how old are you?
I am 60.
Oh, well, you were around. Were you trading in 87?
Yes, I was. I remember that day very clearly.
Well, then if you can figure that as a buying day, you're a better man than I am. There were 1,600 issues on the New York Stock Exchange that day. Do you know how many were up? There were 8 issues. There were 8 issues up that day, and we came very close to melting down capitalism. So I don't think that's going to happen again because we're all too big to fail or too big to go to jail. But I'm just saying that when these corrections come, they're going to be nasty.
But you don't think portfolio insurance still exists like it did in 87?
Well, hell, portfolio insurance, they have more than that. They've got the Federal Reserve, and they're pumping $85 billion a month into the cash market in bonds to float the banks. Of course, there's portfolio.
That's because the Republicans won't do any stimulus. So
no, it's because
Bernanke had to do his own stimulus.
Okay, if you say that's why my party has always done well. I'm a creative realist, and my party has never been elected, but we're still collecting funds. So please send the checks in to our creative realist party. You can use my name, but I don't get into the politics. I just basically look at it. That's all I'm really looking at.
I know, but I hear them argue as though Social Security is a bad thing. Boy, they don't remember the history of this country with poor houses and old people. Social Security is a very good thing. I don't understand why people argue against it.
You're not going to get me to argue against it because I've been taking it for 12 years. I maxed that thing out in I think 82, and I finally been taking the main reason for Social Security for me is because of the medical. I was paying like $800 a month for medical. Now I got the same medical coverage that I had before with Social Security, and it cost me $128 a month. So that's the best part of it. And as I'm older, I'm going to see the doctor more and more, so that is a big help. But Social Security does help. I'm a little leery of the food stamp program, but there's nothing much we can do about some of these things. So,
well, I don't even like the attacks on food stamps because that started out to get the farm vote, and it wasn't even a poor people thing at the time. It was to help farmers.
Well, that's true, and this is when you have a medical bill like we have with Obamacare, and you have a bill that's 2,900 pages. Can you tell me how many pages? There's a little line or two that are in there that is, giving someone a pork belly payoff of some kind. Of course there is. That's the problem with our politics. We need an overall of that.
Well, people like to say that capitalism is the best system, and I think that pork belly thing is part of capitalism. It's you know,
probably is.
You know, you have to decide which system you like better. I frankly think European socialism is not a dirty word.
Well, good for you, and I hope you enjoy living in Romania.
Well, I'm talking more Western
I know.
Europe.
I'm just teasing you, Alex. Listen, they're starting to complain that I'm not talking about the market, so I'm going to have to leave you. Okay?
That's okay. I'm
But
just saying.
call in again.
The market will go down eventually.
Yeah, call me on a big down day. Okay? I want to make sure you're still alive.
You know, I haven't hit a trailing stop yet, so.
Attaboy, I don't want you to either.
Okay.
All right,
Good
my
luck,
friend.
Larry.
Thanks for calling in. Thanks a lot, Alex.
I like listening to your show. I like it.
Well, I like you calling in, too. We got a call from Denver, the home of my second daughter. Kay, what can I do for you?
Well, I want to, you know, I'm a long-time listener, first-time caller, and I totally respect your experience in the market. And kind of what I see is, not that I'm an expert in any means, but daily trading them. I don't know if you saw this movie, but I am starting to see, do you see The Hunger Games?
Yes, I did,
And some of the discussion I've had with people is that we're really moving the society into two, the haves and the have-nones. And I think it'll be interesting to see what will crack this market. I think it's going down. I agree. I want to be in cash every day.
Well, there's two of us, Kay. We should start a club.
Yeah. Well, hey, my folks live right there in Tucson at Oracle and Ina, so I'll come visit.
Well, I live about 3 miles away. Oracle and Ina, that's where the congresswoman was shot. We could hear the gunfire that day on January the 8th, 3 years ago. I remember that very vividly. Yeah, we live 3 miles. We live over at Sunrise and Ina up in the foothills. But we heard gunfire that day, so that was really scary. Yeah.
What is there any particular stock or anything you watch? It used to be back in the day before it crashed. We always watched Goldman Sachs, and you could always kind of get a sense of where the market was going to trade based on Goldman Sachs. Do you have any stocks that you kind of watch to see how they trade?
I really don't. I watch Google because it's it's such a high flyer, and it goes 1150, 1250, 1350, wherever it's going to go. I watch Apple, and those are about the only two. I do watch Goldman Sachs and J.P. Morgan, especially J.P. Morgan, because the news has been so bad and the stock keeps going straight up. So I don't know when it'll turn or if it will turn, but something's wrong when a company pays almost $20 billion in fines and no one goes to jail, and it hardly affects their income statement at all. So it's really, those are things that I'm watching. All I remember is Isaac Newton's never been wrong. This is nothing compared like it was in 1999 and 2000. I wasn't on a radio. Well, I was on several radio shows, but sporadically, and a few TV shows and stuff. And I was, preaching my little tune then, and it wasn't until springtime that I was finally right, but I was right, for a couple of years, and this is what's going to be the case again. I frankly think what we're looking at right now is the high of the stock market for at least one generation. That's what because of the long-term bearish patterns in the Dow and all these other things. So, and if I'm wrong, it's going to be great. I don't know where the money's going to come from, but everything's going to be wonderful, and everybody's going to have a new home and a new car, maybe more than one new car, but who knows?
I agree, and I will call you on that first 500-point day down.
I'll probably be busy that day. Call me on the next day.
Okay, Deborah. Thanks so much, and I appreciate you just being steadfast, and it's not about being right or wrong. It's just giving your observations.
I'm like an archer. I take one arrow out, and I try it. If it misses a spot, I move a little closer to the target and try it again. That's basically what I try to do. I still got a lot of arrows in the quiver, so as long as I got that, I'm okay.
All right. Thank you so much.
Hey, thanks for calling in. I appreciate the words of encouragement, and we'll have to send a postcard to Alex when he moves to Romania. And I'm just teasing Alex because he's a nice guy. Thanks a lot for calling in, Kay.
Bye.
Okay, you bet. Well, I have one fan out there. This is good. We've got the Dow Jones up 114. We got the NASDAQ up 25. The S&P is up 10. So everything is still good in Camelot, and we'll see. Folks, you know, I know when you listen to the show, it's you get a lot of different opinions no matter what, and if you watch I don't watch CNB too much anymore, a little bit of that because I can't stand everybody talking at the same time, but I do watch Bloomberg because Charlie Rose is on there, and I listen to hear the people that he has on, and I watch what people are saying about the markets, and there's nothing new happening here, folks. This is just a normal cycle. Those of you who were around in 1999 and 2000, this is nothing what's going on here. This is a really quiet little market. I mean, even though it's making new highs, it's nothing like 99 and 2000. In 99, a stock would come out that was selling for 175 that had no sales. And it would say, have something negative to say, and the stock would still go up 20%. And now we've got something like Bitcoin. And now I notice they have Bitcoins are being related to movies and also TV series now. So even the Bitcoin thing is probably going to be coming, to some type of market to trade and stuff. God help us if it comes out at $1,100 a share, or whatever it happens it is. But that's we'll have to see. But I would rather have a half ounce of gold than Bitcoin. But that's just my personal opinion. So who knows? I remember, and I'll have to say this before we take the next break, I remember back in 1970, in the 70s, when I was at Drexel and I was buying gold and silver and interest rates were going up and inflation was 13-14%, and things were really in chaos, and we had the savings and loan fiasco. We still survived all that. Things turned and things survived. So those are wonderful things that we're going to make it through this. At least I hope so. We've got to change people in Congress. We've got to change people in the Senate, and we have to change people on Pennsylvania Avenue. And I mean not just North Pennsylvania Avenue. I mean South Pennsylvania Avenue, where the Fed is. We got to change that organization too. They just can't keep doing that. Someone just mentioned that my good friend Mark Faber, who ran the Drexel office in Hong Kong, who lives in Chiang Mai, Thailand now, he's very, very bearish also, much like I am. But, here's two old-timers. We add our ages together, and you're looking at about, pretty close to 150 years. So it's a lot of experience there, but that don't mean the market's going to go down today, that's for sure. But we'll have to wait and see. It's important today for me on a technical basis because of this full moon. If we missed it by a day that came in yesterday on that ABCD correction, that means we're getting ready to have another full leg up, and we'll wait and see. We've got the Dow Jones up 111, and
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Okay, we're back, folks, and I posted into Tiger TV the transportation index. As you can see, it's gone above the highs of the last few days, which had been the 1.618 expansion. It's pretty hard to be short something when it goes above the 1.618 expansion. Also, I've put in the chart of the NASDAQ, what's happened over the last few days. And we've also gone to make new highs. Now, we have not made new highs yet in the Dow Jones, in the Dow Jones Industrials. We're just at the 786, but that's the minor of all of the indices. We've made new highs in the Russell. And so, this market's telling you that it doesn't want to turn. It might turn today, it might turn tomorrow, it might turn 6 weeks or 6 months from now. But right now it has not turned. You don't want to be on the short side of this because if it closes strong today, you could have another 8 or 9 day run without any trouble at all before some type of correction. A correction will come, and if you're prepared for it, you'll get some of it. It'll give you a break, and then it'll give you a rally back to get in, and you will be able to participate in it. But it's very similar to what we were having in March of 2000, and also very similar to what was happening in October of 07 and also December of 07. So both of those was very good. We've got a caller from Neil in Portland. Are you there, Neil?
Yeah, I am, Larry. How are you?
I'm good, sir. What can I do for you?
Well, I just wanted to add a little positive reinforcement relative to your take on the market. It just seems, I've been a long-term listener of Tom's and Basil's and Bud's and what have you. I was in the brokerage business for about 28-odd years. Actually, our offices were one of the firms I worked for was right next to Drexel on 55 Water Street, which I'm sure you probably.
Oh yeah, I've been there many times.
Yeah, but anyway, I just wanted to make the observation that in 2007, as you just pointed out, we had two highs that came in toward the end of that year that seemed just almost inexplicable. And folks would call in to Tom and some of the other radio hosts that were negative relative to, again, their technical analysis of the markets at the time and make the point that, again, just as you suggest, it's different this time and, how can you possibly be, having us, walk down this winding road and then all of a sudden in the year 2008, it seemed that everything effectively unwound on the financial side. I'm not saying that'll happen this time, but I'm just saying that it's kind of interesting to hear the same types of phone calls coming in, and it could be at a fairly similar junction relative to the market. I, for one, believe that we may see an extension, maybe even into early February, mid-February, but we still have a debt ceiling limit, which again Congress has to argue their way through. And right now you have earnings which are certainly are fairly robust and obviously are propelling things in a positive fashion. But I still think, as you say, that a lot of the problems are intractable. At least apparently they seem to be, because there don't appear to be any solutions on the horizon. And again, we can't live in this fantasy forever. And maybe I'm wrong. This isn't a fantasy. It's more reality. But I'm just not sure reality is going to stay with us that long. Put it that way. So again, a bit of reinforcement. I've seen this same thing occur just as you have. I'm about 60 years old, and
thank you very much. I really appreciate it, Neil, and have a happy holiday, my friend.
Thank you. You too.
Yeah.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.